Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Excited for today's show, talking with Cole Farrell today. So Cole, welcome to the show.
Hey, Brian, how you doing?
Doing awesome. Great morning over here. How you doing?
I'm good. I'm excited to be here. It's a lot of stuff going on. It's spring. All's well.
Nice. And where are you?
Yeah, I'm outside Philly. I'm in a place called Allentown, Pennsylvania, or Lehigh Valley.
All right. Nice. Yeah, I've heard of Allentown. I lived in Maryland for a while and would get up to Philly every once in a while just for, weekends or whatnot. So
Yeah.
heard of it. I don't think I could drive straight to it right now if I had to, but awesome. Well, welcome. Glad to have you on. And, let's talk a little bit about you. So do us a favor and tell us about yourself and your background and how you got into multifamily.
Yeah, I appreciate it. So I'm going to make a very long story as short as I can, and then we can dive in, right? So I got started basically in my mental when I was very young because my parents both had businesses. And I grew up just being ingrained with run your own shop, do your own thing, invest, grow kind of mindset. And so since I was little, I always just wanted to be a millionaire. I didn't really know what that meant. I was just like, I play Monopoly. I want to be a millionaire. I want to be a millionaire. That's it. And anyways, my dad had a car business. And so he was building cars and they did basically Corvettes specifically. And a lot of his customers were on the wealthier side and they kind of had this freedom to do whatever they wanted. And so me always just being around going, hey, I just want to be a millionaire. He was like, let me talk to these people. Let me introduce my son to them and see what do they do. And maybe that's something he could go because I didn't know what I wanted. And so as I grew up, I started meeting all these people that did all these different things, stockbrokers, real estate investors, all these different types of business owners. And long story short, I ended up meeting this guy who had a real estate portfolio local to where I was in Allentown, Easton. And he had just the coolest life and he did whatever he wanted. He was free and he was just a happy, fun guy. And I was like, I want that. I love that life. And so I started having dinners with him and meetings with him, and I would do anything that he needed. He was into cars. He had a daycare. I'd help him with his car. I'd help him at his daycare. I'd do whatever it was. And in turn, he would teach me real estate. And so at the time I was 18, 19, and he called me one day after probably 2 years of doing, these meetings with him. He was like, hey, you still want to get into real estate? I'm like, yeah, man, obviously, like I've been doing this forever. Yes. And he was like, great, because I just bought a 2-unit, and that means you just bought a 2-unit. And I was like, what does that mean? And he's like, I bought it. I'm going to sell or finance it to you. I'm going to hold your feet to the fire, and let's see if you sink or swim. And I was like, all right, hell yeah.
Wow,
So
what a deal.
jumped in, and I had no idea what I was doing. I didn't know the first thing about rentals, tenants, anything. My second floor tenant was a drug dealer. My first floor tenant was suing us, and it was just this disaster. But I learned, and I went to Home Depot, and I asked the guys how to hang drywall and all these stupid questions that I later learned. And fast forward, that started cash flowing. And at 19 in college, I'm like, wow, this is pretty cool. It's making money. So I was like, how do I do this times 100? So I was bartending my way through school as I was getting my MBA, and I was still trying to explore this, trying to figure out where I'm going to get money. And I found somebody that was selling a 7-unit portfolio. It was 5 houses and a duplex. And basically I was like, okay, let's do it. How do I take this down? Numbers look good. And ended up partnering with family. So my dad and I went in on this, and he financed the property or got the money. And then the deal was I do everything. I do all the renovations myself. I put in the sweat equity, and then we split cash flow, right? And the plan was to refi him out and then split cash flow. And things happen. They don't work that way. And I didn't know a lot of things that I should know. So I had a strict learning curve, and we couldn't pull out money, and it was all these different things we can go into. But anyways, learned a lot from that. And at the same time, I was working for a property management company because I decided to go in, and I learned so much about construction, how to do things right, how to do things better, how to lease, how to manage all these pieces to real estate that you really should know, right? So it's building
Now,
my
did
portfolio.
you do that? Was that intentional to learn? It sounds like it was. Just want to clarify that.
It was. The intention was to be in the same industry, be in real estate, and I wanted to have my own property management company because at the time that seemed like it made sense. After doing that for a few months, I realized I hated it. And I was like, no, I'm not into this. Let's get out of this. And so got out of property management. But the guy that I did property management with, it was his firm. Him and I worked really well together. And he became a mentor to me. And their family taught me so much, everything about real estate. So him and I started doing flips and wholesales, and that went really good. But there was a point when I'm still building my portfolio. I'm still doing all my own renos and work. I'm doing these flips and things with him. I got out of property management, and I'm still broke, and things aren't working. And I'm like,
Yeah.
something's got to change here. So by that time, though, I had a little bit of money to work with.
Hmm.
And so I said, you know what? This is the time to go big. I love apartments. I don't really love comps. I actually hate comps, but I love
Hmm.
income. I love numbers. I was always in finance. So I was like, let's go bigger.
Yeah.
So I hired somebody that was into syndications, which I learned about. And I said,
Hmm.
okay, if I want to buy something big, I need to raise money because I don't have it. And started sending mailers and eventually found a 9 unit, and we needed 500,000 to buy it. So I raised 500,000, and in process of that, I fell flat on my face, but ended up getting it done. And then was like, okay, this is pretty cool. But again, still need to grow bigger. So I realized at that point that the area I was in doesn't have a lot of large multi. And I don't mean like
Hmm.
available, nowhere does. But I
Hmm.
mean like there's not a lot of existence where I'm at. And a lot of it that comes up goes to the big players. So it's hard to get,
Yeah.
compete with that.
Yeah.
So found an area that I had to plug in South Carolina where I had some other family. And anyway, started pushing that market and just figuring it out. And shortly thereafter, found a 12 unit that fell out of contract on LoopNet of all places, made them an insulting offer. They took it actually, and we
Nice.
bought it, renovated it, and we had actually end up refining it basically 2 weeks ago and went kind of full cycle in that in one sense.
Hmm.
And then while we were finishing that project up, we actually ended up finding a 54 unit in the same area. Amazing deal. And so we raised for that and we just closed that in October. And now
Nice.
kind of just taking a breather, trying to make sure everything's stabilized, good to go, and decide
Hmm.
where to go next.
Awesome. Now, I heard you mention the state of South Carolina. Where are the properties at?
Yeah, so these are actually, in my mistake, I misspoke. These are in
Okay.
North Carolina. I would
North
love to
Carolina.
mine south, but
Maybe I heard
nothing yet.
wrong, but yeah. So where in North Carolina? Are they all in the same area, or do you have things spread around a bit?
As of right now, everything's right around Winston-Salem area.
Yeah.
I love it. We just are building a base there, so we're trying to stick around there, but we would go anywhere in the Carolinas.
Okay. Awesome. Awesome. Yeah, I started my investing in South Carolina. At one point, I think I had 8 multifamily in South Carolina. We still do have one property in Charlotte and one in Augusta, Georgia. So we're really close. I do like that area. I just moved away. And it's hard to manage properties remotely. So well,
Mhm.
awesome. So I'm gonna kind of go back and try to kind of cherry pick what we talk about. And yeah, maybe a little bit embarrassing, but you said you fell flat on your face on that raise for that 9 units. Let's talk about some of the challenges that you had, because I think a lot of people underestimate how hard it is to raise money.
Absolutely. So this first deal, I didn't have anybody around me that was raising or that did this stuff. The only person I had was my coach. So I was running solo,
Hmm.
and I had meetups locally where I was meeting people, and that ended up being a godsend. And I'll tell you why in a minute. I got into this thinking, I have this great deal. If I have a great deal and the numbers make sense, people are going to put their money in it, right? Obviously, they'll double their money, they'll do all this great stuff. Why
You
would they
should.
not?
Exactly.
But
Yeah.
they don't. Instead, they actually just want to go buy a Corvette, or they actually just want to go
Hmm.
finish their basement, even though that's just going to take all their money.
Yeah.
And so I did all the things right. I did all the marketing, I did all the branding, I built the decks. But the first time you do anything's the hardest. And
Hmm.
so it was a lot of feedback. It was a lot of sharing stuff and people saying no. And I didn't understand why, but I kept asking for feedback. And it'd be like, oh, well, this doesn't make sense, or I don't like this risk parameter, or what about this? And so at the time it hurt because I need to find the money for this deal. But in retrospect, it was so helpful because every person that said no, I come back to base and then I alter and improve my stuff.
Yeah.
And so basically I just kept improving. Every time I heard no, I would just hustle harder. And two things I learned from that. One, your best
Mhm.
friend is just how many people can you meet. So I
Yeah.
started going to every single meetup, every place I
Yeah.
could possibly find that had anybody that would listen to me. I'm on a plane, I'm at a restaurant, I'm talking to the guy next to me, blah, blah,
Hmm.
blah. And things happen that way. It's crazy. So the meetups that I held, though, I was hosting them for quite a while, became the biggest source to find investors. I probably got half, if not more, of my investors just from people that I met at the meetups, that
Hmm.
host phenomenon, right?
Yeah.
And then the other thing was, I initially thought that if somebody says, I'm not interested, or they don't respond, they're not interested. And that is not the case. The case
Hmm.
is they probably didn't see it. And I
Yeah.
found this because after I got really aggressive, meaning I couldn't raise the money and we were nearing close and I had to find it, I just went for it. And I said, you know what? I'm going to go so aggressive that either I'm going to die trying or it's going to work. And I
Yeah.
reached out to everybody relentlessly until I got a actual no, stop asking. And what I
Hmm.
found was after many, many asks, a lot of times they actually decided to come in. And the
Hmm.
reason wasn't, I changed my mind. The reason was, oh, I didn't see your 10 other emails, or I didn't receive your 10 calls or 10 texts, even though it says read. And then they're
Yeah.
like, hey, thank you so much for presenting this deal. And I don't understand it, but hey, it works.
It is the follow-up, and I have said this many times, and one thing we're working on as a company is to improve our ability to follow up with people, because that's exactly true. I texted one of my investors, a couple of days ago, and he responded back and said, "Hey, I saw an opportunity you had a couple months ago." He's like, "I wanted to invest in it, but, it looks like it's closed." And it's like, well, we actually have another opportunity right now. How do you like this one? And, 20 minutes later, he filled out the information, but same thing. He'd gotten, 30 emails. I'm probably exaggerating a little bit, but just a little example, if you're following up with everybody, he didn't, like you said, it wasn't because he didn't see the stuff. In his case, he was probably busy doing other things. Other things were a little bit more important. He wanted to invest, but for some reason just didn't get around to it. But me reaching out to him brought that top of mind. And I think you're exactly right. That's the way to raise money. And that's exactly what we're trying to do, is to, make our follow-ups better and make sure we don't miss anybody. So anyway, I love your example, love your hustle. I wish I would have learned that lesson, on my first raise, but I think our first raise was too easy. But all right, so you got it across the finish line, and suppose it, I mean, is that the one that you said you just refinanced?
No, actually, this was the first one, the 9 unit. We hold that. It was a plan to hold and just keep it.
Okay, awesome. So that was your first raise. Let's talk about your second raise. What did you do different, and how did that go? Your first raise was 500,000. Talk about your second raise, dollar amount, and then how you approached it differently.
Yeah, so the first raise was this 9 unit, right? It was we bought it for 1.12, we raised 500. The
Mhm.
second one was a 12 unit. It was a different area, a little bit lower priced, and so we bought it for 1.05 and we needed to raise 600.
Mhm.
So only a little bit more than the first one. And the second one, once I started expanding to the Carolinas, I realized I needed help to build a company, to build a brand, to do everything effectively. I needed help. So I ended up finding somebody, one of my partners, Nate, who came on and we started tag teaming all this stuff together. And that was
Mhm.
so fantastic. I could not have done a lot of this without his help. But we used the exact same approach. We
Mhm.
found what worked from the first one, and then we applied it to the second one. And we just, one, hustled, but two, we had better decks. We had more people to reach out to. Once I closed that first deal, I shopped that everywhere. I told everybody and their brother, and I put it out everywhere so that the second time that I knew was coming up, I would have people
Mhm.
that were ready or excited because they heard about the first one. So now they're
Yeah.
waiting for the second one, right? So that was a really good thing that I was taught that I got to do. And the process was the same though. It was a little tighter. We had 60 days to, close it. And so went in and just marketed the hell out of it. A
Mhm.
couple of the objections though that changed that were different is I did the first one. I didn't think I would get a lot of the same objections, but I did. It was
Yeah.
still, hey, you don't have a lot of experience. And I was like, well, I do have all this experience and all this things. And they're like, yeah, but
Mhm.
you haven't done a full cycle deal. You haven't done a syndication, or you just did that one, so it's too early. And it was
Mhm.
frustrating. So you have to combat those. And
Yeah.
then another one was we moved markets, right? So I'm
Mhm.
based in Pennsylvania. My first deal was very local to me. So it was easier to say, yeah, I can control this. I've got these other properties nearby, no
Yeah.
big deal. It's another thing to say, hey, now we're going 6 or 8 hours away and I'm still going to do that. And they're like, no, no, let's talk about team. What about this? What about that?
Mhm.
So that hurdle then became, how do we present this in a way that we can show how confident we are and how like set up we are and convince that in a way. I shouldn't say convince, but persuade.
Mhm. Yeah, I like it. I like it. And the objections that you get, I mean, guess what? I'm getting the same things. I switched markets not very long ago. I have 4 properties in Salt Lake City, and the more sophisticated an investor is, the concerns are exactly the same. The
Mm,
more sophisticated an investor is, the more scrutiny they're looking at your background. And I've got 9 full cycle deals in South Carolina and Georgia. And so I'm actually getting the same concerns, but usually from like a different echelon of investor. So those are the questions that you have to keep on answering. And something that I try to do is, if you already know what questions people are going to answer, you try to answer those before they have a chance to ask. Especially when we're doing webinars, is one thing that I do is I know what questions they're going to ask. They're going to ask about my experience. And so I make sure that that's one of the slides that we talk about. What I love about what you said is you're learning from the questions, you're changing your approach. And I think that really needs to be part of the processes. So,
mhm.
all right. So let's move to the next one. I mean, 54 unit, that's kind of a big jump. I remember 9, 12, and a couple other numbers, in there that are, single digits. And then you jump to a 54. Let's talk about that. Why did you want to make that jump? And then after the why, let's talk about, exact same thing, raising capital, closing, and the challenges you had there.
Absolutely. So let's go first with the why, I guess, right? So why go bigger? I realized through the first deals, as I got further on with them, especially, that it's difficult to make money with a smaller deal.
Yeah.
Especially when there's a lot of hands on the pot. With the 9 unit, we had great deal, great projections, but it only brings in 9 units worth of money. And so something major comes in, which costs the same amount of money, it wipes out a lot of stuff. And then with the same theory applied with the 12 units, we realized that in order to really start doing bigger things and making more money for everybody, myself and our investors, we need to
Yeah.
go bigger. So we were looking, how big do we go? I wasn't ready for the 100 plus unit. More so, I just didn't want to compete with those guys. I didn't feel like competing with the hedge funds and the
Yeah.
major institutional. I just didn't want to go that route yet. And I wanted to go over 20 because I figured under 20 would have the same issues that I just mentioned. So the plan was to go between 20 and 100. And at that point, it was just, what do we find that fits that criteria? We need
Yeah.
these returns. What fits? And so we look through hundreds and hundreds of deals. We see usually 500-ish deals before we close one. And that just seems to be the numbers. But the 54 we kind of stumbled upon, it was actually the owners from a property next to our 12 unit owned the 54. And we approached them and said, do you have anything else to sell? Because they were selling a different commercial building. And they said, oh, yeah, actually, this other building. They were kind of shy about it. And we ended up pushing further. And they said, it's 54 units. We're under contract, et cetera. And we're like, oh, well, we'd love to see details. What are you under contract for? Yada, yada. Anyways, found out it's kind of disastrous situation. The person that was buying it couldn't close. They passed the execution dates. They were fell out agreement technically. And all these things were happening. And we saw this crazy opportunity. It was a mom and pop owner. And we said, whatever it takes, let's get it done. So we offered them more money. We offered a quicker close. And we said, just sign. And so they did. And at that point, we were so excited. But then we realized we need basically $2 million to $3 million, which we don't have. And we're like, well,
Yeah.
here we go.
What was the biggest raise you had done before that?
600.
600. Okay.
So
Got
we
it.
went 600 to 2.6.
Okay. Just wanted to put things in perspective. Now keep going. Keep going. You're on a roll.
So yeah, we tackled the same thing there. We had, improved the last time when we realized that coming up to this point when we knew we were going to go bigger, we needed more money. So we were smart about it. And before we found this deal, before we were even really pushing for bigger stuff, we were looking for more capital ahead of time. So we were pre-raising relentlessly, trying to find more people so that when we found this deal in theory, that we could do it. We actually started bringing on capital raisers as well, other people that did what we did, because we knew that our current base probably wasn't enough to close these deals. So we needed other people that did have a bigger threshold or bigger audience per se that could help us out. And so kept leaning on coaches, kept leaning on people around us that could help out. And we were just relentless, same thing. But this one was
Nice.
hard. There's a lot more money and it took us way longer to close the raise than we wanted, but finally just finished it.
Nice. 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 Now you said it took you longer than you needed. Did you have to extend the contract or any negotiation with the seller, or were you still able to finish it on time?
Yes. No, we weren't able to finish it on time. So two parts. One, we ended up going with government financing because based on what we were looking at, it was the best way to do it. We could, by the skin of our teeth, get or qualify with government financing, but there's a couple hurdles with that. But as far as projections went, we could get a great rate. So when rates were around sevens, eights ish, we could get a 5, 6, 7, 30-year term, all this great term. So we said, this makes sense. However, they needed 75 days to close. And our previous lender that we were using before them, really lost it after 2 weeks. We lost 14 days and we had to add on another 75, which we had a 60-day close, wasn't going to cut it. So we did have to talk to the seller about it. Thankfully, they were amenable and kind of just dealt with it. And, we rolled through. But there's so many challenges with this deal. But anyways, that was one. The second one was we just had enough money to close when we closed. We did not have the full raise. So we had to post raise for all of our renovation budget, which was out of pocket. It's a whole other conversation.
Yeah. Yeah. And I mean, that's the important part there is, sometimes you have to keep the deal alive, and right now I would say that, raising capital in 2023, I thought capital raising was as tough as it got, and it was harder in 2024. Hopefully that pendulum starts to swing the other direction. I think it already has, but we're still in the difficult side. But, you have to do what you can to keep the deal alive, is the point. Now, you said government loan. I'm assuming that's a Freddie or a Fannie is what you guys were, or something different?
Yep, we went with Freddie. You're right.
Okay. Yeah, and Freddie Mac, they do take a long time to close. That's and Freddie Mac has to approve, so that's one thing. And then to your point, when you're doing those loans and you're doing renovations, you're responsible for the renovation dollars. In a way, that's really nice because, like you said, if you don't have the full raise done, you can still close and keep raising. When you go into other loan products that do give you the renovation dollars, like a lot of the bridge loans, you don't have that buffer. You have to have the full amount or you can't close, and that's,
Right.
yeah, that can sometimes complicate things. But fortunately, I mean, you had a seller that was willing to work with you, and yeah, glad you guys were able to get that across the finish line. So
Yeah. And one last quick thing there is just like you said about keeping the deal alive with all of our deals, I'm making it sound like it was impossible and it wasn't, you do what you got to do. But at the end of the day, it was just, we recognized how good of a deal it was. We recognized the opportunity, and it was just, we'll do anything we can to make this work. And we
yeah,
would. So if we didn't have enough money, we'd go borrow it from somewhere or make do. There's just not an option in our head whatsoever that we're not buying the asset. It's just a
yeah,
matter of how. And so that's one
yeah.
of the things that really got us there.
Yeah, as long as it's a good deal, as long as it's a
Oh,
good
yeah.
deal and it's going to work out. Yeah, that's a great attitude to have. Just we're not going to fail on this one. We're going to get to the end. So, and there are lots of ways to get deals closed, and you got to be creative sometimes. But we're glad you guys closed on that one. Let's see. How about this one? Okay, you have a couple like a 12 and a 9 unit, and you've been managing those for a while. How does managing a 54 unit compare to a 9 or a 12 or a 6?
It's funny. I wasn't sure how it was going to go at the time. I always heard it was easier from some. I heard it was harder from others. And I heard a lot of times, more than I can count, everyone saying, oh, acquisition is the easy part. And then managing, good luck, stabilization, that's the hard part.
Mm-hmm.
And honestly, now I laugh and I think it's absolutely backwards. I think acquisition is so damn hard. And then
Mm-hmm.
I think the management and everything else is much, much easier. I guess as long as you have the right people in place.
Yeah.
So the 54, I think actually is way easier. It's busier. We have more units, right? We basically double our portfolio. But in terms of management, it's simpler. There's more money coming in. There's more opportunity to improve. And the business plan, everything else is exactly the same. It's just more. So it was nicer.
Yeah, I would say that for me, the larger properties are a little bit more complicated to manage, but your point, you have more resources to manage it. More cash flow, you have more people. Your property manager is going to spend more time on a 54 unit than they're going to spend on a 9 unit. I would say per unit. How much time are you putting in divided by units? 54 is way easier than a 9 or a 12. In my experience, I think it'd take more time, a little bit more time on the larger units. But once again, you got more resources. So fun stuff, fun stuff. All right. So let's see. What else about your story could we highlight and share?
One thing that comes to mind is just something that I went through that I don't hear talked about a lot is just finding what it is you like and then kind of following that path,
Yeah.
specifically like the life you want to live.
Mhm.
Meaning a lot of people, myself included, got into real estate and I just wanted to be in real estate. I wanted to be free, but I didn't know if I wanted to flip. I didn't know if I wanted to do management. I didn't know if I wanted to do
Mhm.
syndication or all these things. So I didn't really know. I just got into the different things. I
Yeah.
experienced it and then I figured out what I did and didn't like. And then I found the one that I did like and went that route.
Mhm.
However, the hack that I wish I realized is look at the people that are doing those things that are very successful at them and try to decide if that's the life you want. For
Yeah.
instance, and this is just a random example, but let's say you want to flip houses, or you just want to get into real estate and you're not sure what you want to do, but you find someone that's flipping 100 houses a year and they're working 100 hours a week.
Yeah.
Do you want to do that? And if you do, great, go do it and model that. Or maybe you find someone's flipping 100 houses a year with 4 hours a week. Great, go do that. But whatever it is, go in with intention and really value and see what other people are doing, and then
Mhm.
decide what you want to do at that point. Just
Yeah.
don't go in blind.
Yeah, I like it. And I think most people have gone through something similar, right? I mean, and then what I mean is, I went through the exact same thing. I started with single family homes. I don't think I never liked the idea of flipping. It was something that I would consider, but I looked at several different options before I landed on multifamily, and I had a couple of single family rentals, but a lot of people do go through that, and I think it's there's nothing wrong with, trying something new and backing out. But, really, I think the goal is to find, your niche, and once you find it, stick with it. That's what I would say is once you find your niche and what you want to do, stick with it. But, keep on keeping on until you get there.
Exactly.
So, well, awesome. Well, let's looking at the time, we do have to wrap up soon. So, a couple questions to do just that. First of those questions is what's next for you?
Yeah, what's next? That's a great question. And honestly, I'm kind of sitting back right now thinking, what is next? We're still going to continue raising. We're still going to continue buying more. We want to buy another 40 to 100 unit this year at a minimum. So that's definitely on the docket. We're super excited for that. I also want to dial back a little bit though and buy a couple smaller properties just myself with my own portfolio. And the reason I want to do that is because it's a little like the Wild West when you do it yourself. It's very fun. When you get into the bigger stuff, it's a little more politics, a little more professionalism and things like that, which is awesome. But I just find a lot of joy and enjoyment with some of the smaller stuff because it's
Yeah.
so easy compared to the big stuff I find. So a little bit of both of that.
Yeah. And the smaller stuff that you own by yourself, I mean, there's a lot less stress, and I'll tell
Oh
you
yeah.
one thing, right now it's March 18th when we're recording this, and it'll probably be a week or two after when we release it. But, guess how many people are asking me about K1s right now, right? And it's just,
Oh, so many.
yeah, and obviously we're working hard to get those out as soon as possible. But, and the other thing is, every quarter, people expect distributions, and it's one of those things where, you've given them your pro forma, your projections, and there's a lot of pressure to meet that. And I would say the third thing is syndicators don't make a lot of money until they sell, it's because
Right.
most money is going to the LPs. And so when you talk about, buying a couple of things for your personal portfolio, there is no stress from the investors. I mean, you can have your annual investor meeting, anywhere, anytime, just like, let's see, investor meeting starts now. And, the other part is, when there is cash flow, it's all yours. So I think
Exactly.
that's a definite positive to having your own portfolio worth of stuff. So both are good ways to go. But like you were saying, we were saying, figure out, what lifestyle you want to live, and, look to see what avenue gets you there the fastest. So,
Yeah. And one other quick thing I'll just jump in with is a
yeah.
quick funny story. I just bought finally my own office recently,
Mhm.
and I'm a big car guy, like I mentioned. So I wanted kind of like a shop, and then I wanted to have like an office somewhere I could store my cars and build stuff and play with them, and then have like my real estate segment, right? So I've been looking forever, and I found this place down the street,
Mhm.
ironically from where I live, that is falling apart. And my real estate brain said, "Hey, this seems like a great opportunity. Let's buy it cheap and redo it." And luckily, I was able to buy it myself, buy it cash, and not have any issues with it. But it is a complete disaster, and we're going through zoning challenges. Any challenge you could possibly name, we're facing with this building. And yet, I kind of enjoy it.
Yeah.
Part of me wants to explode doing it, but part of me enjoys it. And it's nice to have that balance of I love the apartments, I love building the big stuff, and that's obviously where I continue to keep going. But some
Mhm.
of the small stuff, the passion projects, and just kind of playing around is so rewarding. So, yeah.
Yeah, there's a lot of fun solving problems, and I kind of took a couple different paths with commercial multifamily. I started a fund, and for me, starting a fund was a waste of money because, right after I started the fund, I realized, okay, I'm raising money, I'm plugging it into other people's deals, but that took the enjoyment away from me. Part of the enjoyment for me is the problem solving.
Mhm.
It is the renovations, it is all those things, and then, having to play middleman between the sponsors and the investors, wasn't a position I like. There's a lot of people that love it. If that's for you, great. But, just as you were saying, you got to find your passion in this, and if your passion is the problem solving, you need to be an operator. If your
Yeah.
passion is, raising money and you don't want the problem solving stress, yeah, start a fund, raise capital. But all right, next question. Okay, if you had to give advice to somebody who's just starting out, what would that advice be?
Yeah, it's gonna sound a little cliche, I think, but I think you need to take big action and take it fast. I
Mhm.
think there's no substitute for just extreme action and doing it
Mhm.
quickly. And I think that kind of relates to fail fast. One of the
Yeah.
things that I was gifted with when I started was just fail fast. And I did so many different things and I screwed up a lot of them, but I
Mhm.
got so much experience. It's not even funny. And so a lot of people that I compete against, we're kind of in different worlds at some points just because they don't have the same experience. And they might have better experience in one area. I might have more experience in a different area. But the only way we could either of us do that is by taking a lot of action and taking it quickly and learning. So for anybody starting out, whether they don't have a deal, whether they're have their first deal or whether they're looking for something bigger, I would say the only thing you should possibly be doing at this moment is just be doing more and doing it faster. And I think everything else will kind of work out.
Yeah, and I like that idea. I think a lot of people are, me included. Fear of failure stops a lot of people. One thing that helped me is I looked at this is me. 5 8 years ago when I was starting this is I asked myself, what's the worst case scenario? If I go all in with multifamily and I fail, what's the worst case scenario? And the answer for me was, well, I'll have to get a job. You know, that's the worst case scenario is I have to get a job. And at
Yep.
the time I was sitting in a full-time job and it was just like, I am in my worst case scenario right now. That helped me. But, from once I made that realization, it's just like that fear of failure was gone. I mean, there are some things that still hold me back. There are some fears like that hold me back. But yeah, I mean, you got to take the action. You got to fail. And if you're not failing, you're not doing, I don't think you're trying hard enough. So,
Right. And on your point, like the action creates experience, your experience creates confidence, and the confidence is what mitigates that fear. But
yeah.
you can't get rid of that fear if you're not confident, and you can't be confident if you don't have experience. It kind of is chicken before the egg. So,
Yeah. It's one of those virtuous cycles too, where they reinforce each other. Action gets
yes.
confidence takes more action, and it just keeps on keeping on, so to speak. But all right. Well, last question for you, and how can listeners learn more about you?
Absolutely. So a couple different ways. One, if you go to volcancapital.com, VOLCAN capital, you can find all my info there and message us. I'm on socials everywhere, Cole Farrell, Farrell. And if you look that up, you'll find me somewhere and just reach out.
Awesome. Awesome. And we'll put links to everything he said in the show notes. So listeners will be able to just go straight to it, swipe, tap, and that magical internet thing will just whisk you away to find Cole. So anyway, Cole, thanks for coming on the show. Very much appreciate your time and, love your energy and the value you added to the podcast today.
Awesome. Thank you so much for having me. This was fantastic.